Hi, I'm Max Keiser. This is the Keiser Report. It's official. The shadow banking system is now bigger than the non-shadow banking system. That's right. It's bigger. The stuff you don't see, the stuff that's unregulated, the stuff that's destroying the planet is now bigger, many hundreds of trillions of dollars bigger than the so-called real economy. This is causing huge problems and other stuff. Stacey Herbert.
Max Keiser, guess what? LIBOR is back in the news. This is the global benchmark interest rate upon which all interest rates are set from there. Credit card interest rates, mortgage rate interest rates. And it's in the news, Max. Just as we predicted, CFTC orders Barclays to pay $200 million penalty for attempted manipulation of and false reporting concerning LIBOR and Euribor benchmark interest rates. The U.S. Commodity Futures Trading Commission issued an order today filing and settling charges against Barclays. The order finds that Barclays attempted to manipulate and made false reports concerning two global benchmark interest rates, LIBOR and Euribor, on numerous occasions and sometimes on a daily basis over a 4-year period, commencing as early as 2005.
Well, I think the key word there is attempted. Now, on this show, we've been reporting on this for, more than a year. It's been known that folks over at the LIBOR rate setting mechanism are committing fraud. And finally, the regulators, due to the efforts of investigative journalists like here at the Keiser Report, they finally had to step forward. And they say, well, they attempted to manipulate rates. They use the word attempted, otherwise it becomes a criminal prosecution. But my question is, why not? Why shouldn't there be a criminal prosecution? You know what I'm saying?
Max, the CFTC orders Barclays to pay a $200 million civil monetary penalty case, cease and desist from further violations as charged, and they're still allowed to participate in the submission of LIBOR rates. So they're submitting every morning what the interest rate should be. Why are they involved in that? Now, this is obviously a conspiracy. The order from the CFTC lays out clearly there are thousands and thousands of emails and recorded phone conversations, just like this case about the bid rigging scandal across America in the municipal bond market. The same thing happened here. There was open conversation about, I don't like those rates, set it higher. I don't like those rates, set it lower. And as the CFTC points out, Max, they were doing this in order to make whole on their derivatives positions. Again, this is the shadow banking system, the hundreds of trillions of dollars. If you think we have too big to fail banks, that Barclays is too big to fail for the $120 billion market cap or whatever it is, imagine the the quadrillion dollar derivatives market.
All right, Barclays makes a bad bet speculating in the derivatives market, like Jamie Dimon recently did over at JP Morgan. They make a bad bet, they lose some money. So they go into the LIBOR market, they commit acts of criminal negligence and criminal fraud to siphon off money, to go into their bank account, their balance sheet, to paper over their other criminal activity. So there's actually two crimes being committed here. First, they committed criminal fraud on the Barclays balance sheet. Then they went into the LIBOR market and committed criminal fraud to cover up the criminal fraud on their own balance sheet. So CFTC, the Commodity Futures Trading Corporation, which is, by the way, run by Gary Gensler, a former Goldman Sachs guy, says two wrongs make a right. If you commit two egregious criminal actions, then pay a small fine. And by the way, that money will probably end up on deposit back at Barclays Bank. And you can continue doing what you've been doing.
In the criminal justice system, if you're involved in a conspiracy, it's always worse. Here, the CFTC is noting that this conduct occurred regularly and was pervasive. In addition, the attempts to manipulate included Barclays traders asking other banks to assist in manipulating Euribor, as well as Barclays aiding attempts by other banks to manipulate US dollar LIBOR and Euribor. In addition, certain Barclays Euro swaps traders, led at the time by a senior trader, coordinated with and aided and embedded traders at other banks in each other's attempts to manipulate Euribor, even scheming to impact Euribor on key standardized dates when many derivatives contracts are settled or reset.
Right, it's racketeering. They're bringing in other banks. They're colluding. So now you have Bob Diamond over at Barclays committing criminal fraud on his own balance sheet, committing criminal fraud in the LIBOR market. But that's, as Frederick Bastiat said back in 1850, when there's plunder at the top and you systematically legitimize plunder as the main source of your economic activity, as David Cameron has done in the UK. He's told the European regulators, look, in the UK, criminal plunder is the basis of our economy. You can't put our bankers in jail because all we'd be left with are a bunch of Marmite pots and some Olympic has-beens. So, and it filters down to the rest of society. But why put other people in jail? I mean, I don't understand why put anyone in jail in the UK. There's no standard of law there. There's absolutely no standard of law. You can do any criminal action you want in the UK, and you won't be put in jail if you're connected, if you're part of the conspiracy, if you're part of the mafia.
The traders' requests were frequently accepted by Barclays submitters, the guys who submit the rates every morning for LIBOR, who emailed responses such as, always happy to help, for you, anything, or done for you, big boy. Right,
then there's open evidence of criminality.
Yes.
Okay. They have reams and reams of evidence of criminality at Barclays Bank and other UK banks and global banks. The government, the regulators, the CFTC do nothing about it. And their plunder has been institutionalized.
Yeah, and they've asked the guys not to do it again, please. They pay this $200 million fine. Now, at the time when we first covered this story, Max, we covered the fact that at the time, analysts looking at the situation, people in the know, were saying, well, the problem with this is that there's no way to determine what the costs of this crime are, because we know that they made whole on some of their bad bets, but we don't know how much they defrauded the global $350 trillion LIBOR market. All the interest rates in the world, many of the interest rates in the world are set based on these LIBOR and Euribor rates.
Well, if you apply the same standards to genocide, why accuse anyone of genocide? Because you could say it's unclear how many people they murdered. Therefore, they're innocent. I mean, why can't some of these folks that are being put in jail for genocide use that defense? This is what Bob Diamond is saying. You cannot accurately determine the amount of my fraud. Therefore, I'm innocent. That's what he's trying to say. Plus this $200 million fine. Since they're still in this LIBOR rigging market, they're simply going to siphon that off from the LIBOR market next week to pay for the fine. If they get caught again, they'll siphon more money out.
Well, let's move on. There are totally so many more crimes in the news, Max. We're going to cover this. We're going to look at the what people outside the mafia racket, how much time they serve, what sort of penalties they face. FBI sting busts 24 trading stolen cards, crime tools. So this happened the exact morning that the CFTC and FSA in the UK fined Barclays $200 million, Max, in what the FBI termed the largest coordinated international law enforcement action in history directed at carding crimes. Authorities said the sting saved $204 million in potential fraud losses. The defendants, depending on their charges, face prison terms ranging from 5 years to more than 25 years. So this is a card crime, Max. But isn't that the same thing as what the LIBOR rigging is? Because LIBOR rigging is rigging the interest rates upon which credit card interest rates are set. So Barclays is also involved in a card crime. And yet, do you see in the CFTC or the FSA announcements, Max, did you see any notice that any of these guys face any sort of criminal prosecution?
No, LIBOR is like having a credit card with a $300 trillion line of credit. And they committed fraud, and they don't get in jail.
Then there were more crimes in the news this past week, Max. Wash trading by high-frequency firms said to face U.S. scrutiny. Ooh, I'm so scared about your scrutiny. That's what they're saying right now. High-frequency trading firms are drawing scrutiny from U.S. regulators seeking evidence that they may be distorting market prices by conducting transactions with themselves.
No, I love this story because they're finally cottoned on to what we've been saying on this show, again, for years, that wash trading or high-frequency trading with oneself is a way to quote stuff or manipulate price action to create what I call price propaganda. And we saw this in Greece. In other words, Syriza, the far-left group, was about to win the election in Greece due to this exact type of high-frequency trading, algorithmic trading, quote stuffing that Bloomberg is talking about, fraud by rigging markets to make the price go up and down based on rigging them with high-frequency trading. The bank stocks in Greece bumped up before the election. Syriza lost. And then once that was established due to price propaganda, the bank stocks in Greece are once again on the primary bear trend. So they're being used politically. So the old days of using political propaganda and media propaganda are finished. Now we have price propaganda with high-frequency trading.
And so anybody who's out there thinking, oh, I want to participate in the market, I want to buy and sell shares, I want to be a member of the, the functioning economy. Robot hand beats you at rock, paper, scissors 100% of the time. So here's a robot hand created by Ishikawa Aku Lab at the University of Tokyo. He is so high speed, you can't tell that the robot is cheating. It only takes a single millisecond for the robot to recognize what shape your hand is in, and just a few more for it to make the shape that beats you. But it all happens so fast that it's more or less impossible to tell that the robot is waiting until you commit yourself before it makes its move, allowing to win 100% of the time. Now, Max, apply this to the high-frequency trading, and I might add that most high-frequency trading patents refer your patent.
Right, they refer to my virtual specialist patent, and the phrase millisecond is important here because high-frequency trading is attempting to trade in increments faster than milliseconds for the exact same reason. When they see an order coming to the floor, they do a trade ahead of that order to capitalize on any price disparity that may occur as a result of that order, and they scalp the difference. So it's siphoning money from the exchange. It's just like putting a tube into a gas tank and siphoning gas from your neighbor's car. That's illegal. But Goldman Sachs leader Lloyd Blankfein would tell Charlie Rose, when asked about Goldman Sachs' siphoning and high-frequency trading and illegal pilfering of money from the exchange floor, said, no, we're making a market. That's code for I'm a shameless, market-manipulating, law-breaking, larcenistic schmuck. That's what that means, making a market, when it comes out of Lloyd Blankfein's pie hole.
So 100% of the time, this robot beats you. Just like in the markets, 100% of the time, a high-frequency trading algorithm is going to beat any human being. 4 big banks score perfect 61-day run. That's in 2010, Max. Despite the running unease in world markets, 4 giants of American finance managed to make money from trading every single day during the first 3 months of the year. Their remarkable 61-day streak is one for the record books. Perfect trading quarters on Wall Street are about as rare as perfect games in Major League Baseball. There have only ever been 19 perfect days in baseball. But Bank of America, Citigroup, Goldman Sachs, and JP Morgan produced the equivalent of 4 perfect games during the first quarter.
Yeah, because they use this technique of computer trading that scalps markets ahead of the other traders in the market, and they steal. So Sandy Koufax, who threw a perfect game famously, was high on acid. I'd like to point that out. And I think maybe what we should do is to get these Wall Street CEOs high on acid and have them trade with themselves for a few days and see what happens. All right, Stacey Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Don't go away, much more coming your way. Stay right there. Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to Boulder, Colorado to talk with Michael Krieger of LibertyBlitzkrieg.com. Michael may be evacuated at any moment as a giant forest fire threatens to engulf his area of the city. Michael Krieger, welcome to the Keiser Report.
Thank you so much for having me, Max. And yes, it's true. I am under pre-evacuation notice, so all my important stuff is packed up and I'm ready to roll at any minute.
Fantastic. All right. Michael Krieger, Barclays Bank was just fined $200 million for rigging LIBOR and Eurobor rates, a $350 trillion market. They were also asked by the CFTC to please stop doing that. Your thoughts?
Yeah, I mean, this is a recurring theme, and I think there are two key things to understand and notice with regard to the story. The first is that the reason why this is so pervasive and becoming more pervasive by the day and more egregious and more aggressive as far as manipulation of markets and the key rates that everything else is priced at off of is because of the fact that the American, Anglo, Western imperialism empire that exists today in the world is maintained through two things. One is military forces, we know, but the other is financial markets. And therefore, the government is more than happy to work with the financial oligarchs or the banksters, whatever you want to call them, to rig the markets on purpose to maintain this aura of financial stability, financial strength, to continue to dominate essentially the rest of the world and get them to do what they want. So that's why you're seeing all this stuff. You're seeing it increase and you're seeing slap on the wrists because the governments and the regulators do not want to go after these guys because they're doing what essentially they're being told to do. So that's really it. But I think the key thing also is that if you read the CFTC press release, they're sort of trying to make it seem like they're doing a good job. 200 million. I mean, even the director of enforcement for the CFTC admits that, you know, the LIBOR rate that they were manipulating is used to price hundreds of trillions in swaps, derivatives, et cetera. So, I mean, to manipulate hundreds of trillions of dollars, you get a 200 million fine. I mean, it's just a joke.
Yeah, let's talk for a moment about the term moral hazard. This is understood to mean that if you don't properly regulate these folks, if there's no deterrent for committing this type of criminality, then you risk becoming the norm in these markets. And the reason I bring this up is because over the past few years, we've heard Ron Paul and others in America go after the Fed and talk about how the Fed's manipulation of interest rates is causing economic harm in America and by extension to the rest of the world. Now, the moral hazard here is that the Fed's model of manipulating interest rates and causing wide-scale economic distress has gone global. So now you see the LIBOR folks in London are doing the same thing Bernanke does. People in Europe, people in South America, people around the world have picked up on this idea that if you manipulate rates, you engage in rent-seeking, you larcenistically siphon off cash with no cost and no risk, it's okay. And it's gone global now. The mafia Fed model of Ben Bernanke has gone global. Does America get any benefit out of this?
No, I mean, as you can see, if you look at any statistics, whether it's real income, which has not gone up for decades in the United States, the middle class disappearing basically before our very eyes in the United States. The argument from the establishment would be that we're benefiting because we're maintaining our status in the world, but the facts on the ground don't justify and live up to that propaganda, because what you really see is this is the tiny, it's not even 1%, it's 0.001%, the financial oligarchs, the CEOs of multinational corporations, and the politicians in Washington, D.C. It's a very small group of people. It benefits them because it keeps them in power, while it hollows out the American economy, destroys the middle class, makes people not want to invest or do anything, right? Why would you want to create a business? Why would you want to invest capital? Why would you want to do anything if you know that your government's criminal? The answer is you wouldn't, and that's why we're not seeing that happen.
All right, Michael Krieger, let's talk about another SEC investigation. They're looking into wash trades, high-frequency trading, and high-frequency wash trades. Now, I worked on Wall Street myself for many years, as you have, and we know that a wash trade is basically trading with yourself to manipulate prices up or down. And now suddenly Bloomberg has a story saying, yeah, you know what? Wash trade is systemic. It's endemic. It's 85% of the trades on the New York Stock Exchange are computer-driven algorithmic trading, and most of those are wash trades, quote stuffing, high-frequency trading, purely for the benefit of that 1/10 of 1% you're talking about, and to the detriment of these markets, right? These markets are suffering as a result of all this fraudulent behavior, yes?
Yeah, no, absolutely. I mean, I still, despite the fact that I bash a lot of Wall Street all the time, I'm still very connected into that world with people, whether it's on the buy side or the sell side. A lot of friends and a lot of contacts still there. I had this conversation before I got online with you with somebody who works at a brokerage, and he's just saying, he's lamenting the fact of how the markets are rigged, how it's manipulated, how no one believes in it, how everyone's just sitting there, saying this is a waste of time, but what can we do? And that's really the truth. And so yes, the markets are being destroyed, and the economy and the real economy is being destroyed. So we're essentially seeing the destruction of the entire what was left of the free market system and the markets themselves because of the computers dominating, because of the lack of the SEC and the CFTC or any of these regulatory bodies to do anything, and the fact that the truth of the matter, it's becoming clear to everybody, is that the government and the financial oligarchs are working hand in hand. That's why none of them ever go to jail. They have guns to each other's heads. They probably have blackmail on each other that would embarrass the hell out of them. So, they're working together, and that's what we have here. And so there's nothing for us to do at this point except for try to live our lives, try to do the right thing, and then just wait for this thing to blow up, which it will do.
Right, now to cover up all this fraud, the central banks are engaged in financial repression. They're repressing populations around the world. The European Central Bank is now considering negative interest rate policy, or NIRP, to replace what we have come to know as ZIRP, the zero interest rate policies. And of course, this is not only penalizing savers, the people who are the backbone of the capitalist system, but it goes beyond just penalizing these people. It's aggressively almost, you could say, financially torturing them with negative interest rates. In other words, you have to pay the bank to hold on to your money. How do they get away with this, Michael Krieger?
Well, I mean, it's interesting you bring up this point in general because it's not just the savers that are getting destroyed, which of course they are, and they're being forced into other assets, precious metals, commodities, equities in some cases. But on the other side of the equation, what about the people that have no money? You know, if you looked at credit card rates recently, right? They're not 0%. You know, they're double digits, high double digit percentage. So the poor that are trying to borrow in that capacity have very high interest rates. Now, if we're talking about an item that the government wants you to buy, like a new car or a new home, then you could pretty much get pretty low rates. But again, the key is low interest rates aren't really available to people that want to go out there and start a speculative or be an entrepreneur, a business like that. The low interest rates are available with leverage to the financial oligarchs to engage in rent seeking and leverage speculation.
Right. Let's take a country like Greece for a second. If I'm a Wall Street bank, a Goldman or a JP Morgan, I have virtually unlimited access to virtually 0% interest to do a leverage buyout of that country, to load that country up with a debt, wait till it goes bankrupt, and then I've got the assets to sell to pay back the loan that I made, and I keep the difference. But if I'm an entrepreneur in Greece, I have no access to credit. And no access certainly to cheap credit. So, and our regulators and our politicians are telling us that there's somehow a problem, like the Greeks aren't paying taxes or the Greeks are lazy. They never point out to the fact that the oligarchs have access to this 0% interest rate in which to maraud and pillage Greece, but the people, locals, don't have any access to any rate of any credit.
Exactly. And that's why you're seeing globally, as you mentioned, this is a global phenomenon now, and you're seeing the big companies get bigger. And as you know, the percentage of assets that the top 5 banks in the United States have today, as in relation to GDP, is much higher than it was pre-financial crisis. So, not only are we not dealing with what caused it in the first place, but we're actually doubling down on the prior policies, and we're allowing the people that perpetrated it all to become bigger, more powerful, more dominant, and more in control of the political economy in the United States. And again, clearly this is a game plan, and they're not going to give up on their own. And it just needs to fall apart essentially, like the Soviet Union did, which I fully expect it to.
Now, Matt Taibbi recently penned a piece for Rolling Stone magazine about the decades-long rigging of the municipal financial market by a handful of big banks, including JP Morgan, Goldman Sachs, Bank of America. Your thoughts?
Yeah, I mean, I didn't read his article, but of course we know about Jefferson County in Alabama and how they went in there, what they did. We know what Goldman Sachs went in and did with Greece. Again, it goes back to the same strategy playbook that we discussed earlier, which is you go into a community, and I mean, this game is as old as humanity itself, really, or as old as civilization or money systems are. You go in, you load your enemy up with debt, and then you strangle them, and then you make them do what you want, or you just buy their assets on the cheap. I mean, that's what's going on. And I was writing about this a few years ago, talking about how the U.S. debt is illegitimate. Right? This debt was forced upon us to bail out the banks, which caused the crisis in the first place. So at some point, humanity, and whether it's Greece or here or Ireland or whatever, needs to step up to the plate and say, no, I did not voluntarily accept this debt. We need to write this stuff off, period.
Now, the popular dissent in the U.S. is pretty non-existent against this type of loan sharking, predatory finance, and financial terrorism in America. And what kind of pressure do you think might evolve at some point? Or is the population, like any community that's being terrorized by the mafia with loan sharking, they're simply too afraid to say anything?
I don't think it's fear at all, actually. I think it's complete Disneyland mentality. I think that what the Fed and the U.S. government have been very, very good at doing ever since Occupy Wall Street, right? It's no coincidence, as we've discussed, that when that movement started, that was sort of when gold was peaking, markets were crashing. Ever since that came onto the scene, they've been very good at sort of making things look better, right? So gold is down, markets are up. The people have been lulled into a sense of passivity again. thinking that, I know something's wrong, but hey, the markets aren't saying anything. So my view is that it's going to take considerable more pain on the streets, to the middle class, maybe a recession will do it, to wake up the next group. My guess would be close to the election, as we see a recession, we will have chaos again in the markets, and that will cause people to wake up.
All right, Michael Krieger, we're out of time. Thanks so much for being on the Keiser Report.
Thanks, Max. Always fun.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Michael Krieger. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.